In the 1970s and 1980s, Japan was considered the economic miracle of Asia. Until the beginning of the 1990s, everything developed positively. Wages, loans granted, home prices, stock markets. But then the Japanese real estate bubble burst, many loans could no longer be serviced, and the Nikkei stock index plunged from its all-time high by more than 60% within just a short time. This triggered a long period of economic stagnation without growth, but also without any perceptible recession. Households and companies retained consumption and investments. Instead, they attempted to reduce their debts. The consequence of lacking demand was deflation, that is, a sustained decrease in prices. The Japanese central bank attempted to counteract the trend by buying government bonds and keeping key lending rates low, while the Japanese state pursued diverse economic stimulus programs, with the result that today Japan has the highest level of government debt in the world. It is more than 240% of GDP. Before this backdrop, the government in office since the end of 2012 under Prime Minister Shinzo Abe has embarked on a new approach. The Abenomics program, which is named after Prime Minister Abe, is an attempt to escape the deflation that has lasted more than 2 decades by pursuing expansive monetary policy and stimulate the revival of sustainable economic growth. In the beginning, the plan seemed to work. The Nikkei stock index doubled within 1 year. Foreign exchange markets also reacted quickly to Abe's announcement, and the Japanese yen lost substantially against the US dollar and the euro. This was supposed to help Japan's export economy. Meanwhile, however, Abe's plan is considered failed for a simple reason. Japan has not taken care of a few important issues for over 20 years. There are still banks with too many bad loans. There are still areas of the economy with cartel structures and no competition. And there are still government officials involved in many investment decisions. Inexpensive money does not help fight any of this. Investments do not increase as long as there is no confidence that there will be future economic opportunities. Companies do not raise the wages of their workers if business is sluggish. Therefore, as a consequence of unchanging or even sinking real wages, household consumption does also not increase. At least Japan has left deflation behind. The introduction and later increase of value-added tax and the depreciation of the yen helped. The latter made imports more expensive. However, the depreciation of the currency hardly had any positive effect on exports. Japan has a trade deficit for the first time in 3 decades. Until now, Japan's government and the central bank did not have any other answer to this than just making more cheap money available. But that is not enough over the long term. The only thing that will help Japan is structural reforms and consolidation in the banking sector.